Hello and welcome to Business Incorporated live on Channels Television. It's the first trading day of this week right here in Lagos, Nigeria. Here's what you should be watching at this time. In North Africa, Mesa Digital Innovation has received official approval from the Central Bank of Egypt to transform into one bank, the country's first fully digital bank. Ethiopia has reported the lowest tax to GDP ratio in sub-Saharan Africa, falling by 4.9 percentages. Plus, Kenyans abroad remit 53 billion Kenyan shillings in July as government holds Remittance's household survey. And it's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets now. We'll start with oil. We're seeing oil prices still staying, in the green from earlier today. Brent, $66.12 a barrel. We're still seeing that rage trade at this point. WTI crude, $63.14, up 0.54%. Traders watching out for clues from a meeting later in the day between U.S. President Donald Trump and Ukrainian President Volodymyr Zelensky as they attempt to come to a peace deal to end Europe's deadliest war in 80 years. So we're still seeing prices there range. Nothing crazy happening with the oil prices at this point, but we see traders on edge right now, ready to execute that trade. Let's get a check on metals now. We see gold prices edge higher, recovering from an over 2-week low amid uncertainty over the course of the Russia-Ukraine war there. But we see spot gold, that's up 0.30%, $3,345. The U.S. gold futures, that's also up 0.30%. And platinum, palladium, on the flip side, those are down. Platinum trading at $1,338. Palladium holding on to that $1,000 per ounce level, and spot silver also, shining there, $38.08. So it's also the range trade right there. We see the yellow metal has fallen to an over 2-week low last week as U.S. President Donald Trump met Russian President Vladimir Putin and discussed a potential peace agreement with Ukraine. Yeah, we know how uncertainty impacts the metals there. All right, to other stories now. Foreign investors are piling into South Africa's government bond market, attracted by the country's status as one of the top-performing emerging market trades. Net inflows reached 139 billion rand in the 18 months of June, a surge that eclipsed the previous 4 years combined. And that's according to the National Treasury data. The momentum reflects renewed confidence in South Africa's reform-driven coalition government, which has strengthened sentiment with pledges to revive growth and stabilize public finances. Well, let's take it to North Africa now. We see Egypt's financial landscape is set to enter a new digital era with the Central Bank of Egypt granting final approval to Mesa Digital Innovation, backed by Bank Mesa, to transition into one bank, the country's first fully digital bank. The innovative platform, slated to launch in 2026, will offer a full suite of services exclusively through digital channels. No branches, no hassle. This move underscores Egypt's broader digital economy ambition, striving to boost financial inclusion and position the nation as a regional leader in fintech. And Ethiopia slid to the bottom of sub-Saharan Africa's tax to GDP ranking, now collecting just about 7.5% of its national output in taxes, a sharp drop from 12.4% in the 2014-2015 fiscal year, representing the steepest decline globally over the span. That's according to a study by the Institute for Fiscal Studies and the Ministry of Finance's Tax Policy Directorate. The fall is driven predominantly by declines in key revenue streams. VAT, that was down about 2.0 percentage points. Custom duties, that was also down. Employment income tax, that dropped by 0.36 points, in stark contrast to peers such as Uganda is holding up to 13.1%, Kenya 15.2%, and Rwanda with 15.7%. The sub-Saharan African median, that's about 13.2%, highlights the scale of Ethiopia's fiscal shortfall at this time. All right, to our first discussion now, we see the rise of artificial intelligence has transformed financial services, bringing speed, efficiency, and smarter decision-making. But alongside these opportunities comes an escalating threat. That's sophisticated fraud schemes powered by AI, from deepfake identities and voice cloning to AI-driven cyber attacks and automated phishing campaigns. Financial institutions face a new frontier of risk as regulators tighten, oversight, and they're investing more now in advanced detection tools. The question looms: can innovation outpace fraud in the AI era? Join us now to discuss. We have Destiny Agbanimu. He's the head of growth at Autogon AI, and he's joining me right here in the studio. It's great to have you.
Pleased to meet you.
Good afternoon.
Good afternoon.
So, AI, at this point, I have seen some videos of myself on social media selling something that I do not sell. They were selling some kind of high reward investment scheme there that I had nothing to do with. And it sounded like me, just, a few parts. We're kind of shaky, but it is real. It is upon us, right now. Talk to me about how much of a threat this is for financial services.
All right, thank you so much, Ladi, for this opportunity. I would say, taking out the data for 2024, Nigeria lost a whooping sum, the financial sector lost a whooping sum of 52 billion naira, just for 2024 alone. And that's about 169% of the previous year, the third year, and over 5 years cumulatively. There have never been any loss at that margin, at that figure. So it sees it as it's a threat, it's a crisis currently in the Nigerian financial ecosystem. And also bringing back the mandate from the CBN, which was released in May 30, prompting every bank to enhance their system for KYC. KYC is Know Your Customer, and also for anti-money laundering scheme, right? So AI coming into the space, emerging technology coming into the space, it's a big crisis, right? And not just for that, it has been projected that we're going to have over 140 million subscribers who are already using smartphone. And with financial inclusion penetrating different spaces and emerging technology, trust me, it's a big crisis.
Right, and it reminds me of that limited series, To Kill a Monkey. And we saw how Efe brought in the AI aspect of their cyber crime, and he actually made more money for a boss, doing that. So I'm wondering, is that really the true picture, what that movie portrayed there?
I've not watched the movie.
Oh, you've not watched?
I've not watched the movie, but however, I think AI can do a lot of things, right? Voice cloning, like you mentioned, deepfake videos, a whole lot of synthetic documents can be created using artificial intelligence, and these documents are going to pass through KYC checks. It's just like creating an artificial being that owns an account, and that account is used for fraudulent activities. So that's the future currently, but the good news is that there is a solution, right? There is a solution to combat this particular issue.
So who's more at risk here? Is it the customers or the banks themselves?
So I would say the banks, the customers, and the public institutions, because we're talking about integrity here. And sometimes when we want to attract investment funding, foreign investment funding into different sectors, and all of this money are, missing out due to one or two glitches, it's an indicator, right? It's a signal. So I would say the customers are losing money, the banks are losing their integrity, the banks are losing money in a very huge way, all right? And so it affects everybody. It affects you, it affects me, it affects virtually everybody.
Right, so talk to me about practical steps now that the customer can use to protect themselves and the banks too.
All right, great. So strategies to protect ourselves. Number one, I would say we need to be aware of the problem. A whole lot of people are not aware of the problem. One thing is problem identification. We understand the problem. We understand how to fight the problem, and that would require adoption of AI technologies to fight fraudulent activities, to fight digital fraudulent schemes, right? And the second would be PPP, which talks about the private partnership initiative. We need the stakeholders from the government side, we need the stakeholders from the private side to come together and solve the solution in a sustainable way. Another one that's very strategic is we need to invest in innovation. There should be an innovation bank that invests in money to the financial institutions in order to combat this particular problem.
So, talking about the solution at this point, is it a situation where we have to import the solution?
Thank you for that question, Ladi. So there's no need to import any solution. Currently, we have African solutions that understand the African context in solving that problem. We cannot, you know, it's just like you building your local products because you understand the market, you understand the behavioral pattern, you understand our policies. We build on the context of the Africa continent. And that has been, you know, integrated into the Nigerian banking ecosystem as we speak. A whole lot of fintechs are already onboarding, a lot of banks are currently using the product. And you know, it makes sense. So there's no need for imports. There's a local solution for us here in Nigeria.
Right. So, you know, some people might say, you know what, I don't want to be a victim.
Okay.
I'd rather just stay out. I'm rather not have any virtual account or digital account. I'll just, you know, go back to walking into the banking hall, the traditional way.
Yeah.
Is that the best way?
I wouldn't, it's not scalable. You know, you can't hide from this problem. There's no way you don't want to transfer money to your siblings or move money from one point to another. That's the future of banking, right? You could go to your Play Store, download an app and open an account with any of the fintech products, right? So that's the future. You know, financial inclusion is what we preach every day, and it is important that we achieve that goal. So there's no way people can run away from this, but the advice would be, how can we modernize the legacy banking system to adopt artificial intelligence and solve this problem that we are facing in our country today?
Right, so we're going to find that hedge.
Definitely.
At some point.
Cheers.
Thank you so much. It was great to have you, Destiny Agbani, was the head of growth at Autogon AI.
Thank you so much for your time. Cheers.
All right, so let's get a check on what's playing out with most of the markets that we track now. We see on the African continent, it's mostly positive there with South Africa's equities there under slight pressure today with the broad market indices. So we see, yeah, it did cross 102,000 points at some point, but we see a pullback there, 0.61%. That's for the South Africa index. NGX all-share index still around all-time highs, up 0.14%. Last time I checked at the terminal, I don't think there was that much pressure on the insurance stocks earlier, but you know, who knows? We might still see profit taking, you know, there carry out. So let's look at North Africa. We see EGX30. That was a marginal decline at intraday, 0.02%, 35,978 points, and we see the NSE that's in Kenya. Closed Friday, big there, 0.78%, 165.66 point. Maybe this might also find a new all-time high at some point. And if we look at the Gulf area now, we see stock performance there were mixed. If you're looking at the UAE, traders were trading cautiously as investors are waiting direction from, you know, the upcoming U.S. Federal Reserve's Jackson Hole Symposium. Abu Dhabi's index, that edged up about 0.1%. That's looking at other parts there in the Middle East. We see Commercial Bank and Lulu Retail there. They were under pressure. So we see the Tadawul, that's down 0.10%, 10,886 points. Qatari index down 0.62%. So it's mixed sentiment there if you're looking at the UAE and in most parts of the Middle East. And for US now, we see the futures tied to the Dow Jones Industrial Average. That's down. It's mostly red at this point. I guess investors are trying to figure out the direction, you know, at this point before making that trade. So we're seeing 0.15% down. S&P futures 0.14%. Same thing for the tech-heavy NASDAQ there after trying to get back to that 24,000 level. So we're seeing at 23,770. So this is giving direction on what's going to happen in the markets in the U.S. Let's get a check on Asia markets now. We're also seeing, there's sentiment there, like everybody's trying to be cautious, you know, starting off the week. The Nikkei, that's the one that's closed in the green, 0.77%. Kospi, a big 1.50% drop, 3,177 points. Other parts of Asia now. Let's get a check on, the Nifty. That closed better there, 24,876 points, a big 1% jump there. So it's looking quite good there for the Nifty 50, even though we had, you know, moments of sell-offs there, but now we're seeing investors now starting to cherry pick right there in India. So it's not looking so bad right there. But let's get a check on what's playing out in Europe now. We have Lars Holter in Berlin to bring us up to speed. Hello, Lars.
Hello, Lottie. How you doing?
I'm doing great, Lars. So what are investors looking at in today's market? Are they starting off the week great?
Yeah, it's a pretty weak start here. We see some red in European markets pretty much across the board, but only a little bit here. Let me get into a little bit of detail because, Ladi, last week we saw some optimism in the markets. It was all awaiting that meeting between Trump and Putin in Alaska this past Friday. Now that the meeting has actually not accomplished anything at all, it's widely seen as a win more for Russia. You would think markets would drop again, but as we see, it's just a tad with the DAX in Frankfurt maybe down a third of a point, a third of a percentage point, and really just still within reach of its all-time high. So we are seeing what we're often seeing, that markets don't actually react as much to these big events as we sometimes would think. And we're back to the situation that we were just a couple of weeks ago, days ago. Markets currently need a catalyst to get any higher, and that catalyst right now is nowhere to be found.
Yeah, I know investors definitely searching for a catalyst at this point. It's looking weak for most of these markets. But let's look at another industry there in Europe. You see the German auto industry, that's still struggling, with many companies warning of are worried that their weak performance might lead to job cuts. What are you hearing from the unions?
Yeah, Ladi, first and foremost, I'm hearing that they are worried and that they're on their toes. If history is any guide, they are afraid that the large automakers, those of course are Volkswagen, Mercedes-Benz, Porsche, BMW, that they would resort to cuts to the workforce now that profits are down again, and that would mean most likely layoffs. But now the leader of the industry's biggest union, that is called the IG Metall, they say that layoffs can no longer be the go-to solution for troubled businesses, especially not for those that are listed on stock markets and might pay a handsome dividend. As a case in point, the auto companies do. The union says companies should cut their dividend instead, meaning putting their employees before their shareholders. And honestly, that does make a lot of sense. The dividend is technically, if you think about it, a treat for shareholders after a successful year. Now, if a year wasn't that successful, it does actually make sense not to cut within the business, but simply to refrain from handing out that reward. And that is a lot of money. Each of those big German car makers is actually paying out billions of euros in dividends every year.
Talking about, dividends, we know some shareholders can be quite unforgiving. What would shareholders be saying about this?
Well, Ladi, it's safe to assume they won't like it, of course, but now you're getting into a moral discussion of capitalism. Who should money flow to, the worker or those who have invested capital? Now, in times of growing inequality and with wealthier people much more likely to be investors than working people would be, it would be a good idea to take from investors and secure the income of workers. It would help balance a society where for years now the gap between the rich and the poor has been widening. And, let's look at some examples specifically in the auto industry of where those dividends are flowing. At Volkswagen, for example, the Porsche holding has about a third of all shares, and that means a third of dividend payments. And as I said, we're talking billions here. A third of that flows into the holding that's controlled by two families, the families Piech and Porsche, that have long been intertwined with the company. Over at BMW, half of the dividend payments goes to two single people, two BMW heirs. Together, these two people are expected to rake in 1.3 billion euros this year alone. So you see, if dividends are cut, it's not actually that painful for anyone. It actually only costs those who already have a lot of money, often millionaires and billionaires.
All right, so, Lars, it's a brand new week. Is there any data we should be looking out for this week coming out of Europe? And what's the euro looking like?
Can you say that again? I didn't hear you quite well.
Yeah, so it's a brand new week. What are we expecting on the data front in Europe? And how's the euro looking?
If I hear you right, you want to know about what we're expecting now in the next couple of days with data or so? Because I'm sorry, I have a really bad connection suddenly. Yeah, we're not expecting that much in data right now. We're having a really weak data front, especially when you look at what I just said in terms of the markets. desperately looking for a catalyst for more gains here. It doesn't look like they're getting much. We're looking obviously of more to the United States right now with the interest policy. Here in Europe, especially with the EU and Germany, we're looking at what could possibly move with tariffs. Not so much data right now, but right now there's not much on the horizon for this week that we can see as a potential catalyst for markets.
Right, and we're looking at those major meetings between the big presidents coming up. But thank you so much, Lars Holter, there, for bringing us up to speed on what's playing out in Europe. Thank you.
Thank you, Ladi.
All right, let's get a check on other markets that we track. Now, let's see what's happening. Wow, it's red on the screen, kicking off the week for digital currencies. Bitcoin, 2.85%. That's shaved off. Ethereum, a bigger drop, 5.56%. We see Solana not left out, about 5% drop there. Cardano. So most of these altcoins have tried to, muster up some gains, losing all of that. And definitely, when the big boss sneezes, we see the whole market, catches a cold. So with that big Bitcoin drop there, after touching $124,000, that's all wiped away at this point. 115, that's a trade right there. Let's look at some of the headlines in the crypto space now. We see that's Treasury has confirmed Bitcoin reserves will be filled through seizures, as in the U.S. According to Secretary there, Scott Bessent, he reiterated that the government would not be buying any Bitcoins at this point, as according to that strategic reserve created by President Donald Trump in that executive order from March 7th. Speaking to Fox Business earlier, he did ask about U.S. Gold reserves, and Bessent said that the U.S. had also stated to get into the 21st century with a strategic Bitcoin reserve, which he hinted would remain as a store of value. So, Scott Bessent is confirming that already seized assets would continue to be held under that treasury. No Bitcoin would be sold in the immediate future, and that further seizures could add to the government's holdings over time. So they're not planning on buying Bitcoins, just like MicroStrategy. That we see in Thailand, they're letting their tourists convert crypto to local currency, that's the baht. They're preparing to launch a regulatory sandbox that will allow foreign tourists to convert cryptocurrencies into the Thai baht for spending in the country, and that's according to their securities regulator. The tourist DigiPay project will run for 18 months, beginning in the fourth quarter of 2025, according to an August 18th announcement from the Securities and Exchange Commission right there in Thailand. Now, we also see Metal Planet Inc. They've bought more Bitcoins. I guess they're buying the dip at this point. 775 Bitcoins, priced at $93 million. Bringing the Japanese hotelier turned crypto treasuries overall holdings to about 18,888 Bitcoins. Metal Planet said it purchased the 705 Bitcoin at an average of $120,000 per coin. This brought its total stash there to that amount of about 18,000, valued about $1.94 billion. So those are the top stories right there in the crypto market. We're still seeing most of these big institutional investors trying to accumulate more Bitcoins with the drop that we've seen so far. But the big question now is this the beginning of a bear market? That's most of the fear for investors at this time when they see big drops happening in the crypto space. So that's what's trading at this point. And that's the much we have for you today on Business Incorporated. We'll bring you more stories tomorrow for Business Morning, and again at 1:30 for Business Incorporated. Thank you for watching. I'm Ladi Williams. From me and the team right here at Channels HQ. It's bye for now.